It's 5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tech earnings diverge. Amazon results bolstering the AI investment narrative. Apple dips on disappointing guidance. Stock futures gain as South Korean chipmakers rebound and European equities head for an all-time high. And the yen rallies on intervention just hours before the Bank of Japan decides to keep interest rates unchanged. Tech stocks surging across Asia. We have to get the latest details from Winnie Su in Hong Kong. Winnie.
Good morning, Bonnie. Well, happy Friday. What a significant rebound in Asia, especially with gains being led by South Korea's Kospi Index, which saw an unprecedented jump of 18% in a day. Now, that's being mainly led by SK Hynix and Samsung Electronics, which both saw a surge by more than 25%. Overall, the sentiment is being boosted by the solid earnings from Amazon and Microsoft that reassured investors of the AI monetization, but also the authorities from South Korea stepping in to curb the volatility, as well as how traders pointed to the rescue by Citadel of situational awareness that is putting a floor to the recent sell-off driven by these leverage bets. Now, for the board, we take a look at the Japanese yen because, yes, we saw that big spike overnight driven by the authorities' intervention and also the U.S. rate check, but we did see these gains started to fade after the Bank of Japan kept rates steady with the Bank of Japan's Governor Ueda, in fact, striking a bit of a hawkish tone, still citing the upside risks of price outlook. However, it seems like at the moment, markets are demanding more.
It does, although, Winnie, you may not have seen this, but we're at 158 now, so a massive strengthening again just in the last few minutes. That is Winnie Su in Hong Kong. Now, let's get a look at what's happening in Europe. Over to Britain and Justina Lee.
Good morning, Bonnie. Now, in Europe, we don't often get to crow about our equity performance, but today is one of those days because the Stocks Europe 600, outperforming the world this month probably, and it's hit another all-time high, rising 0.8% today. Now, of course, a lot of that is led by a lot of the losers from earlier this week, but we kind of have a rotation of that rotation with a lot of tech names rebounding strongly over the past 2 days. Now, when it comes to the bond market, we have a slightly lower oil today, but interestingly, we just had some inflation figures from the euro area in general, and the core numbers slightly exceeded expectations. Also exceeding expectations are French CPI figures coming out today. And so we're seeing here the 2-year German bond yield rising 2 basis points. Now, on the other hand, if we flip the board here, we can see also on the short end bond yields in the UK, a completely different trend after the BOE decision yesterday. Now, it was also a hold just like the Fed. We also got 3 dissenting rate hikes. But Andrew Bailey came out and told everyone, don't think that we're edging toward a hike. And you can see here that the market heard that message loud and clear, Bonnie.
Absolutely, a lot of messages coming to this market this week, Justina. And in fact, yesterday, even though we had a massive spike and a massive rebound in the SOX index, it was up more than 8%. We're still down on the week so far for the Nasdaq 100. Again, we'll see what happens today, but pointing very much to gains in today's session. Obviously, across the indices, we're seeing the same thing, and it's a bleed across from the Asian session, but of course also the situational awareness situation. Let's look at yields, though, because markets still digesting that Fed outcome and, of course, everything that's happening globally as a result. The 2-year yield staying the same, and we have the longer end of the yield curve coming down just a couple of basis points, but we're still very elevated with the 10-year at 464.50 and the 30-year very close to that 520 mark that we hit earlier in the week. Not maybe getting unanchored, though. We are at least holding on to this pricing. Let's take a look at oil, because once again we're down today for sure. We're down to 88 on Brent and 82 and change on WTI. At the same time, still up more than 20% this month. It's been a wild ride for this market this month. Let's get to some individual movers now. Over to London and Chloe Melly.
Good morning, Bonnie. We've got positive and a negative news coming out of those big tech earnings this morning. So we had Apple down after the component shortages really weighed on its sales guidance. Then on the other hand, Amazon has had this cloud computing revenue accelerating once again and reassuring investors around this AI spending. So two very different stories this morning there. Moving on to Coinbase, and the crypto exchange is down this morning after missing revenue expectations. It seems that it is really struggling with that weakness in the crypto market. So we're down more than 4%. And finally, let's go over to the Netherlands, where the world's biggest record label, Universal Music Group, is taking a major hit this morning, more than 22% after it reported a miss in subscription revenue. It seems that it's really struggling to hold on to this market share because of this rising competition from other record labels. And so we are seeing that really drive down the shares this morning.
Yeah, it's been a while, several months for Universal as well. Chloe, thank you so much. Chloe Melee there. She'll be back later in the hour. Also coming up this hour, we'll take a closer look at these moves in the yen and the US dollar with Jane Foley of Rabobank. Let's start with tech earnings though. Amazon jumping double digits in pre-market trading thanks to robust AWS results. Supply shortages though taking a bite out of Apple shares. With us now with more is Bloomberg's Mark Bergen. So it's a fifth straight quarterly gain for AWS. Mark, what's Amazon doing right?
What it's doing right is it's growing its cloud business at a pretty impressive clip. I believe it was about 37% for the quarter. You know, the Amazon AWS has been the market leader in cloud for a very long time. The story that Andy Jassy, the CEO who ran that division for a long time, is telling investors is this is a repeat of when we built AWS. For a long time, Amazon was famously unprofitable. They were investing that money in this cloud business that soon became this much bigger growth engine than their e-commerce business. And he's sort of saying the same thing with this new version of AI and chips, and we're going to see a repeat. And certainly investors are buying that. We've seen that this morning, yesterday and this morning as well.
Yeah, why haven't they been up until now? Amazon has been lagging stock-wise, and yet it seems to have been doing very well, particularly in its cloud business for the last several quarters.
Yeah, I think obviously there's, they had a big impact around tariffs with their e-commerce business. I think the AI story in general for Amazon has not been a positive one. They were seen as sort of a late mover. They don't have the strategy in place that, say, Microsoft and Google or even Meta do as far as what their game plan is around large language models, around models around robotics and sort of the next generation. That still remains pretty unclear, I think, but they're clearly the biggest beneficiary in the cloud computing market.
Apple, Mark, it's definitely hurting, price hikes and so on. What should we expect from Apple for the next few months?
Yeah, it was pretty fascinating. Tim Cook described this as a 100-year flood, this memory chip shortage. I think this was an indication. We've certainly seen that from earlier results, and we've been reporting on that for our colleagues in Asia for some time. This is clearly the biggest indicator that this chip shortage is now having a major impact on the world's biggest company. So I think a lot of that was the sluggish sales forecast we saw, I think is now dependent on those supply chain issues.
What about for the consumer? Should we expect now extended wait times? And what does extended actually mean in this scenario?
Yeah, as far as I know, I don't think they've, Apple and Tim Cook said this was actually a sign of just increased demand for iPhones and iPads and their products. As far as I know, they didn't signal any extended wait time, but that's certainly a possibility.
All right, Mark Bergen, thank you so much. We'll see how these stocks trade today. Turning to Japan, the yen trading now at 159.10. It strengthened very suddenly just a few moments ago. Once again, we know there was intervention earlier. The Bank of Japan also holding its policy rate steady just hours after that, at least first intervention, with apparent help from the United States. Joining us now is Bloomberg's Ven Ram. Do we just get another round of intervention, Ven?
It doesn't look like, because it stopped at 159, but nevertheless, it's an important spike up that obviously will have the market sit up and take notice. Now, the Bank of Japan had a massive opportunity this morning, which I think they squandered because, after yesterday's overnight intervention, they could have doubled down and said, look, we are going to put up rates, which would have completely caught the markets unawares because no one was pricing a hike. If they had come out with their guns blazing and fired the next salvo by raising rates, that would have really propped up the yen like much better than what the intervention could have done. We have seen these repeated bouts of intervention that have failed to sustainably pull the yen up. So, and I think that, if they are found wanting in terms of monetary policy, no matter what they do on the currency front, it's not going to help the yen.
Why didn't you sound a little bit more hawkish? So it's been characterized as maybe a modestly hawkish BOJ meeting. But the plan, or at least the reporting coming into this, was that maybe they would up the cadence of any rate hikes beyond just one every 6 months that the market is used to.
Absolutely. I think that, he repeatedly said that, look, there is a threat that inflation could breach 2%. And in fact, if you see the inflation forecast for this fiscal year, it's 2.5% now. And they also think that the economy is going to go much better. And so for them not to be raising rates and keep the rates below neutral is inexplicable to bondholders, which is why you see that the bonds have repeatedly come under pressure. They've sold off. And if you look, currency swap the JGB yen holdings into the dollar, you will find that they are trading at a considerable price discount to treasuries. And that is why the markets want to hear a very strongly hawkish message, which they fail to hear.
Then I have to ask you about the situation, obviously in Korea, but in Asia more generally. How much has this to do with the situational awareness unwind, and how much is it just generally that positions have been flushed out?
I think that it's got to do with the latter thing that you mentioned. Positions have been flushed out. We saw that Korean market go down 20%, and it's come back up by a whole lot this morning, today. So I think that, this is all a positional flushing out of positions. But I think that the longer term questions remain here. The Korean market has been behaving more like a casino than a stock market actually behaves. So I think that, the risks are out there, and I think that the AA story has played out, and I think it's been overpriced, and I think there is more correction to come in the coming weeks and months.
Ben, thank you so much. That is Bloomberg's Ben Ram in Dubai. Now to other top stories trending on the terminal this morning. South Korean stocks surging a record 18%. In today's trading, largely driven by chipmaker stocks, obviously, that had faced 3 days of massive sell-offs. The rebound was fueled by bullish reports on the AI build-out overseas and regulatory support from the South Korean government, among other things. Anthropic says its AI models breached 3 outside organizations during cybersecurity tests that went wrong. 3 Claude models accessed the internet and hacked real-world systems after a testing environment was mistakenly left connected. President Trump says Hamas has agreed to disarm as part of an agreement with the US-led Board of Peace. Questions, though, remain about the extent of the accord. Officials say details will be refined over the next couple of weeks. Hamas officials confirmed they struck a deal that includes provisions on their weapons. Coming up, we'll take a closer look into Ken Griffin's rescue of situational awareness amid the latest AI sell-off. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Leopold Aschenbrenner's hedge fund, Situational Awareness, slumped to about $10 billion in total assets after Citadel's Ken Griffin bought most of its public stock bets. That's down from $45 billion for the fund at the start of the month. Well, for more on this really crazy story, Bloomberg's Nishant Kumar joins us now. So what actually happened here? How does a fund, well, we know partially how a fund goes from $45 billion to $10 billion in a month, but give us the details of what happened here.
Yeah, so this story is really about borrowed money and a lot of it, and how it supercharged a very crowded, hot trade the world has ever seen. Banks were all lending into this, some offering 4 to 5 times the fund's own capital in terms of leverage. So what was already a big bet on AI got multiplied several times because of this leverage. Then the tech trade turned, and some of the banks, they were so willing to support the fund on the way up, decided that, they want to protect themselves, they want more collateral. So they asked the hedge fund for more collateral, and to find it, situational awareness had to start selling into prices which were already falling. So we have seen this story repeat time and again. What stands out really here to me is how quickly it happened. We are talking about days. And even after all that, July was down 67% for the fund, but the fund is still up 80% year to date. That shows how ferocious this AI rally has been.
Why did Citadel step in? What did Ken Griffin get out of it? And, were there no other positions they could have sold in order to hold on to their assets?
Well, everyone loves a discount, isn't it? If anything is on sale, we all rush to buy it at the right price. But it also reflects how only a handful of firms in today's world can take on like billions of dollars of stocks in one single transaction. And a few of them got calls this week. So Millennium had a look. Jane Street, which is an investor in situational awareness itself, they also had a look. Citadel got a wind of it, and they negotiated a discount and ultimately bought their positions.
Negotiating through the night, according to your reporting. Nishant, you have to wonder what it says about the AI trade that maybe some of these funds passed, like Millennium and Jane Street. Was this a one-off, or is it a warning sign about AI exposure across the market?
I mean, it's hard to say that, but I won't read it too much into whether it's a signal that shows how the AI story is going to unfold. The firm hasn't gone anywhere even now. It's still among the largest equity hedge funds right now. It still holds on to Anthropic bet, which is north of $5 billion. If anything, this is an old lesson resurfacing. While leverage on top of a very concentrated, crowded bets, and this is what it leads to. The AI thesis isn't really what was tested this week. It was the leverage behind that trade.
Nishant, I wonder if you'd seen the conspiracy theories that Citadel had put out a potential Fed rate hike story in order to actually cause this sell-off. That's a little bit of a conspiracy theory that's going around Twitter. Is there any truth to it?
I mean, it's hard to, as you said, it's conspiracy theory. So, as a journalist, it's hard to, unless, we write about it, it's hard to say. Social media is hot these days, and it becomes hotter whenever a story like this unfolds.
Exactly. It's in the ether, at least. Nishant, thank you so much. That is Nishant Kumar there, our hedge fund reporter. Coming up, a look at what else is making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The United States has led the world in building huge technology companies and attracting enormous capital, but Europe showing a strong desire to try and catch up. Here's more from the latest episode of Wall Street Week.
Growth has been slowing down for a long time in Europe, but we've ignored it. And now we cannot ignore it any longer. Now conditions have changed.
We need new tech champions in Europe.
The fact of the matter is 43 of the largest 50 companies in AI are US-based. Europe has one.
The quest for Europe to get into the mega tech game is one of the reasons it's now undertaking the biggest revision to its merger rules in over 20 years. And few people know more about the potential impacts for businesses and consumers than Fiona Scott-Morton, a professor at the Yale School of Management and a former chief economist at the Antitrust Division of the U.S. Department of Justice.
There's been a lot of angst in Europe over growth and the ability of Europe to stay at the technological frontier. And we've had a couple of reports, the Letta report and most recently the Draghi report, that have really hammered on that and pointed out all the issues in Europe that are holding back Europe from more growth.
Scott-Morton says the new guidelines, which were published in April and are now under review, aim to change that.
I think the complaint has been among some parties in Europe that the Commission is not favorable enough toward the mergers they would like to do. So this is explicitly laying out how do you come to us with a story for why your merger is really good, why your merger is going to increase innovation, something like that, and explicitly laying out what those factors would be and how you might go about showing them.
It's a big deal. It's a big deal because it's been 20 years since there was a revision of the guidelines, and it's a good exercise in showing the direction of where competition law is heading.
Ingrid Vandenbora is the head of Skadden Arp's European competition practice in Brussels. It's firms like hers that are navigating the changes on the front lines.
What the guidelines do is they set out also for the difficult deals, also for those that may not be so easily to get through. There's a couple of factors that are more developed. The Commission's going to look at efficiencies in a much more robust way. They call it the theory of benefit in the guidelines. So they're not only looking at what will the harm be to the economy of a transaction potentially, but also what will the benefits be. The second element is that they're going to look at markets on a dynamic way. The key term in the guidelines is dynamic competitive potential of a transaction. And so it's going to be forward-looking.
Beyond giving companies explicit leeway to argue for efficiencies or changes in the market to justify their mergers, the new guidelines specifically address the question of startups and provide ways for early investors to reap rewards for taking chances.
We all know that that's what startup companies need. When you invest, you need to know you have an exit route as well, and that's really what the guidelines are trying to do. So those are a couple areas where very concretely the guidelines set out some more robust frameworks for companies.
And you can watch the full episode of Wall Street Week tonight from 6 p.m. Eastern. Coming up, we're going to talk about this yen move, several moves in fact, with Jane Foley of Rabobank next. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Tech earnings diverge. Amazon results bolstering the AI investment narrative. Apple, though, giving disappointing guidance. Stock futures gain as South Korean chipmakers rebound. European equities heading for an all-time high. And the yen rallies a couple of times today. Intervention in the early hours, then the Bank of Japan decides to keep interest rates unchanged. So let's take a look at these markets then. Even with what looks to be a nice rebound for the Nasdaq 100 today, it is the worst performer of the indices in July. So far, before today, it's still down 5.7% month to date, even after yesterday's nearly 3.5% gain. The SOX, by the way, yesterday up more than 8%. And I mean, just look at Korea today. The Kospi rallied 18%. What kind of bounce is that? It's literally unprecedented. It has never happened to see an index in such a major developed country rally that hard. Obviously, this is bleeding across to S&P futures and Russell 2000 futures as well. Let's take a look at yields. We're not seeing too much movement. A little bit lower at the longer end, but still holding on to the price that we moved to after the FOMC, so 465.51 and very close to 520 on the 30-year yield. Oil continues to show some respite. At the same time, we're up almost 20% this month nonetheless. We're just below $89 on Brent, just below $83 on WTI. And we have European gas futures rallying once again. We're up to 59.36 now per megawatt hour. All right, let's get to some stocks to watch. Here's Chloe Mele in London.
Good morning, Bonnie. Let's start with big tech this morning. We had Apple down this morning, more than 7%, after giving quite disappointing sales guidance because it's been really dealing with those component shortages, those supply chain disruptions. And then on the other hand, we have a much more positive story coming from Amazon, with the cloud computing business accelerating once again and reassuring investors around this AI spending. And so we have those very two different stories in that big tech sector this morning. Moving on to the crypto exchange Coinbase, which is taking a bit of a hit this morning. We're down more than 4% after the revenue fell short of expectations. It seems that it's really dealing with this continued weakness in the crypto market. And so we're seeing that really drive down the shares this morning. And finally, Universal Music Group, the world's largest record label, is taking a major hit in the Netherlands this morning. We're down more than 24% after it missed expectations on a very key metric, which is subscription revenue. And so it's a company that's been having some trouble over the last year or so already. And so this print this morning has just really not helped its case. And so we're down quite a lot for Universal.
All right, Chloe, thank you so much. Chloe Melly there in London. Massive volatility for the yen today with an intervention earlier and then a BOJ decision to hold rates pat. We also got the news conference afterwards. Rabobank's Jane Foley writing, quote, a rate hike in October would be a first step towards a firmer yen. But for the dollar yen to hold below 160, the market may also have to price out Fed rate hikes this year. She joins us now. She's head of FX strategy at Rabobank. So, Jane, if you just take a look at the chart for the yen, it's been really incredible today and a very strange day, perhaps, for intervention. Most surprising to the market, which maybe is what authorities wanted. But we had the yen strengthen and then it reversed some of those declines. We're going to take a look at it now. As you can see, a massive strengthening there to about 158. Began to reverse those declines and then we got another sudden drop just less than a half hour ago. We were back down to 158.50 and again the market is fighting that. We're at 159.56. What is going on today?
Well, the market, the market is clearly very nervous. I mean, will there be intervention? Did the US check prices yesterday? Certainly, at least one press reporter suggested that they may have done. Will that happen again? Now, I think really the timing of this is really quite clear. I mean, the Fed, for instance, a couple of days ago had the result of pushing the dollar low. And that's because, of course, US short-term interest rates went down. And that provided really a perfect opportunity for the Ministry of Finance to come in and intervene because they haven't intervened since late May, despite the fact that dollar yen has been pushing higher. And of course, that was probably because why would they try and intervene in a period of dollar strength when the dollar was pushing higher? But of course, this week it started to go down. So that really did open up a window for them. But the crucial question is, can it sustain? Can dollar yen sustain, at 160 without pushing higher again? And many people in the market were looking at the Bank of Japan, hoping for something hawkish. I would say they were hawkish, but often in these circumstances with respect to the Bank of Japan, it's almost as if the market has made up its mind and the market, it seems, will only wants to see a faster pace of interest rate hikes. And that, of course, was not on offer today because it only hiked interest rates last month.
Yeah, exactly. Now, Ueda at the news conference sounded a little bit more hawkish than perhaps the market originally thought. What is his position on this? Is he waiting to see? Is he concerned about, overdoing things or about getting off the path so well trodden so quickly?
Well, I would say that Ueda has been hawkish for a very long time. If you read his Christmas Day speech, for instance, in fact, if you go back the last couple of years, there's been a couple of themes there, and that's an aging population means a declining labour pool, and that is inherently hawkish. But of course, if we look back over the last, since October, there's been a number of sort of one-off shocks. You had the LP leadership election, then you had a new prime minister, and then you had a general election in February, and then you had the start of the war. And I think, to be fair to Ueda, you could say, well, all of these events probably slowed down or the pace of interest rate hikes, made them more cautious. And that's probably why they didn't hike for 6 months. Now, going forward, can they hike in October? I think they can. And if we look through some of the rhetoric in today's statement, they're talking about inflation, core inflation, above 2% in the second half of the current fiscal year. They're talking, quite bullishly about inflation. If you look at wages, they think that there is that in place at that real good position where you can see wages continuing to be pushed higher. Yen weakness is part of the reasons for the inflationary pressures. Of course, higher oil prices another reason too. But look at the strength of the Japanese economy. Yes, there's been a moderation because of oil, but there are some good factors in there too.
But this is just it, Jane. Didn't we learn this week that talk is cheap? And if hawkish commentary isn't followed by action, or at least the promise of action or some kind of transparency, the market just won't accept the talk alone.
I think that's the rut that the Bank of Japan, have found itself in. Talk alone isn't enough. And the market, I think, is caught up really on two things. The first, it thinks that maybe the Bank of Japan is behind the curve. And last year we had US Treasury Secretary indicating just that. And the second is that the market is looking at what the Prime Minister is doing. Now, the market is quite fearful that the Prime Minister could be leaning on the Bank of Japan not to increase interest rates. So there is that fear that's that's been coming through. But also the Prime Minister, we know that she's an expansionary fiscal politician, and the market is quite fearful of what's going on in JGB yields, what's happening there, to what extent is that really impacting market sentiment too. So I think what the market needs to see is not just the hawkishness from the Bank of Japan and maybe that interest rate hike coming through in October rather than December, but I think it does need further reassurances on the fiscal front. There is a concern about JGB issuance. There is a concern about the balance sheet of the Bank of Japan. That's come down about 15% since 2024. And I think that really has changed the constitution of who owns JGBs. And it really has, I think, accelerated the weakness of the yen. And, what I would say to that is that there might be lessons there, for Kevin Walsh, at the Fed if he wants to change the balance sheet in the US.
Jane, we're seeing a little bit of dollar strengthening today. What are the longer-term dynamics, given the backup that we've seen in longer-term yields, and just how the press conference was accepted by the market, and what happens in the next few weeks if we get some dissenters and other people coming out and maybe trying to reverse some of this market action or not?
Well, I think the Fed is very interesting. It was this week. And I think, the word credibility comes to mind. Walsh has only been in that position for a very short period of time. And yes, he said that he was inflation fighting, but the market, of course, was doubting him. And you see that both in the long end of US yields going high, but you see that in the short end as well. So he's really got to assert his inflation credibility, or, inflation needs to moderate further in the US to sort of let him off the hook. And that's, I think, where we are in the US. Now, with respect to the dollar, we still have obviously got the war on. And I think because of the safe haven demand, I don't think the dollar is going to fall very much. But at the same time, if we look at the euro, yes, the euro has risen this week against a weaker dollar. But I don't think the market really wants to build very large euro positions when the war is going on. It's because of the detrimental impact to that, to the terms of trade in the eurozone. So I think we're in this period where we might just see some sort of choppy sideways trading for euro dollar.
All right, Jane, we have to leave it there, but thank you so much, Jane Foley of Rabobank, with a cameo, I should say, from Buzzy. All right, two other top stories trending now on the terminal this morning. Leopold Aschenbrenner's Situational Awareness Fund had tried selling some of its stakes in private companies this week to raise cash and meet margin calls. Sources say Aschenbrenner opted not to go through with any sales after reaching a deal with Citadel to offload the bulk of its public equity portfolio. Ukrainian artillery crews are on track to have access to extended-range shells by the end of the summer. The country's defense ministry said in June that it had purchased 15,000 extended-range shells from Denmark without providing details. The high-tech tool could give Kyiv a drastically expanded frontline kill zone. FIFA will proceed with plans to privatize its commercial business. That's despite spreading threats from regional football organizations in Europe, Asia and North America to boycott the World Cup. FIFA issued a statement earlier today maintaining that it was not, quote, selling football. Coming up, a complete disarmament. The Board of Peace says Hamas has agreed to the next phase of the ceasefire with conditions. More on that next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. The war between Israel and Hamas potentially inching closer to a longer peace. President Trump announcing on Truth Social that the Board of Peace had reached an agreement for Hamas to disarm. This does come with conditions. It also comes as the administration faces growing pressure on multiple conflicts in the Middle East ahead of the midterms. Joining us now is Bloomberg Government's Jonathan Tamari in Washington. President Trump obviously continuing with these wars as if the public is behind him, as if Congress is behind him, but they're clearly not, Jonathan, are they?
No, and in fact, the public seems to be turning increasingly against President Trump, in large part because of the wars, the costs that people are seeing, prices at grocery stores, prices at gas stations. There's been a series of polls out this week from a wide range of groups, Fox News, CNN, Associated Press, Quinnipiac University. They all have the president's approval rating either at his all-time low or very close to his all-time low. Deep disapproval on the economy, deep disapproval about the Iran war. AP had, I think, something around 1 in 3 Americans only supporting it. And so it's been a very big drag on the president, and it's a drag on Republicans right now as we get much closer to November's elections.
Jonathan, critical minerals are back in the headlines. Trump signing an order on export curbs. I thought we had this taken care of back some time ago.
I think the U.S. thought they did as well, but there's a deal with China, and there's, as our colleagues have reported, there's been a lot of dispute actually between the U.S. and China about whether China is living up to the deal, whether the U.S. has violated terms of the deal, and it's still a major pressure point that we saw China use against the U.S. to kind of fight back against President Trump's first round of tariffs. The tensions are certainly rising around this, around a number of other issues, including AI, about China's involvement in the Iran war potentially. And this is all coming. We know President Xi is coming to the U.S. in September. They had a very friendly meeting, the two presidents, a few months ago, but the tension is rising ahead of this September meeting between the two here in Washington.
Yeah, I mean, the timing is so interesting, Jonathan. Is it manufactured tension in some ways? Are both sides angling for a little bit of leverage for this meeting?
There certainly could be some of that. Both sides certainly wanting to come in with something to push on, to ask for. But I do think the tensions around the rare earths are significant. The U.S. saw that that was a major weakness that China was able to exploit during that initial trade fight. So it's a big concern for the Trump administration. And this deal that they think they had, again, they don't believe China is living up to its terms. And so that could be a point of, I think, real tension and real dispute when the two presidents meet again.
All right, Jonathan, thank you so much. We'll monitor developments. Bloomberg Government's Jonathan Tamari with the roundup from Washington, D.C. Amazon and Apple capping off a big week of tech earnings, a massive week, you have to say. Amazon jumping after reporting a fifth straight quarter of cloud revenue growth. Apple, though, slumping, supply shortages hurting its sales forecast there. For more, let's bring in Bloomberg's Neil Campling. I'm not sure the market was really anticipating this, Neil. It's amazing how these companies continue to surprise us quarter after quarter. Let's start with Amazon. You know, the stock has not been rewarded in the last several quarters. It's definitely getting rewarded today. I mean, we know AWS is a success. Why is the market missing this?
Yeah, I think if we look at the actual growth of AWS, Bonnie, the key is 37% growth that came in was above street expectations, around 31%. It's an acceleration of growth, the best since 2021, the best in 5 years. So there's relief there that the capex that they're spending is in some respects paying off. If you look at hyperscaler spending on the capex, which obviously is a big deal for many investors, their ratio is far lower than the other hyperscalers. They're about 25% capex to sales basis, whereas companies that are out there like Oracle is at nearly 100%. So they've been rewarded today, as you mentioned. Stock is only up 2% year to date, so there's some relief for sure.
Yeah, absolutely. No relief, though, for Apple, and that also surprised the market. The memory cost issue for Tim Cook, he's likening it to the 100-year flood. I mean, that's terrifying, no?
Yeah, it's pretty exceptional phrasing, but of course they are the company with the greatest purchasing power of any company on the planet. So for them to be struggling tells you just how bad the memory crunch is. Unfortunately for us consumers, we're going to be feeling it, I suspect, in much higher ASPs for the iPhones going forward. But yeah, the guide was slightly soft. Don't forget, out of the Mag 7 stocks, again, this one was the best performing company into earnings, best one year to date. So there's a bit of travel and arrive to a degree with the stock, I think. Yeah,
it was the place where you went to hide if you didn't want to take part potentially in the AI trade. Speaking of which, Korea, I have to ask you, 18% for the Kospi, and that's a gain today. It could have been either way, but I'm just, making it clear that we're up 18% for the Kospi. What's going on? I mean, this is not sustainable, is it?
It's a record move today. Obviously, the regulator talked earlier in the week about putting in curbs. Well, they may have put in curbs today for some of the leveraged products, but not the actual, the single stock products. As you say, the volatility is so vast that it's going to put off professional investors, I think, to have that kind of level of volatility. Something needs to be done to try and reduce that volatility further, because it is just probably the most volatile market as we've seen on this trade of AI, but it's a concern for sure.
Yeah, absolutely. I mean, it's been so whippy. You have to wonder if really anyone has made money in this market in Korea. Situational awareness, did that have repercussions around the world or impacts on markets around the world? Or is that, just talk? Was it really too small of a situation to actually have that kind of an impact?
I suppose, look, if this fund itself was being levered and they were unwinding these, clearly the news of the last 24 hours, they've probably been unwinding those positions for the last few days. And then it has a knock-on effect into other kind of levered products and levered positioning. So I suspect it was a contributing factor, and then it sort of would have helped to kind of steamroll some of the other momentum factors, because we saw significant dispersion and stock volatility across many companies.
Neil, thank you so much. We need all of your expertise and context on mornings like this. That is Neil Campling there for us. It's big oil's turn now for earnings, with earnings coming out from Exxon and Chevron this morning. Let's get a preview with Bloomberg's Mitchell Furman. So, Mitch, with the war restarting in earnest, it can't, obviously that won't have played into this quarter's results most likely, but it's been a good quarter. Is there anywhere we should look for fragilities?
Well, the U.S. majors, Exxon and Chevron, are expected to post their third highest ever quarterly profits. There are, of course, outages in the Middle East. We should hear particularly from Exxon, which has quite a significant presence in the Middle East, and they've lost a lot of production. So we should be hearing an update from them about their outlook for this current quarter and the rest of the year, which should be quite market sensitive.
And with those companies being so close to the physical market, Mitchell, will we get a better read on how they anticipate pricing to go? Particularly with inventory so low across the world, not just in the United States, but Europe as well.
Yeah, whether we get price predictions or simply a read of the current market remains to be seen. But so far in earnings from Shell, TotalEnergies, we've heard language about kind of the market being difficult to call through the rest of the year, obviously because the oil prices have been so closely driven to headlines and what's coming out of the Trump administration regarding a potential peace deal, but because it's so volatile and the Strait of Hormuz has experienced kind of this open and closed, off and on nature, and then there's the increasing threats through the Red Sea and the Black Sea and exports from Russia, diesel. There's a lot of moving parts, which gives these big oil executives a little bit of pause to actually predict where oil prices are going to go.
Absolutely. We'll be glued to the conference calls to hear any stray comments whatsoever. Mitchell, thank you so much. That's Bloomberg's Mitch Furman there. Coming up, we'll get you set up for your trading day. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. Now a look at what's ahead today. Well, if you made it to Friday, congratulations. You've got some more earnings. Chevron and Exxon reporting quarterly earnings before the bell. More results as well from AbbVie, Colgate and Moderna. Plus, we get data. University of Michigan sentiment data out at 10 a.m. Eastern. Let's take a look at some pre-market movers. Apple, well, that was a real shock for a lot of people, down more than 7% at the pre-market, talking about supply constraints, talking about FX issues, talking about the memory cost issue being like a 100-year flood situation, and that really caught the market off guard. Amazon also caught the market off guard, a fifth straight quarter of gains for AWS, 37% higher in revenue. Tesla, this is an interesting one. The Wall Street Journal is reporting that it's looking at a potential sale of its China business, or at least a separation of it, to pave the way for a possible merger with SpaceX. And this is your macro picture for the day. Could be an update for equities. That's it for Bloomberg Brief.